Hey guys, I wanted to do a video on a strategy I use using Fourier string in the RSI. Today I'm going to use as an example the pound dollar. This is going to be more like a tutorial using timing solutions. So what I did, I went ahead and blocked out all the data from the pound showing on the chart and put on here the dates of the swing points. So these are all the swing points on the pound dollar, 18, the 29th, up to the 6th, current today, August 6th, which was a high. I don't know what the pound is doing now, but right now, as of the 6th that I remember, was a swing high. And I want you to look at the Fourier forecasting from this swing low to this swing high. I'm not bothered with here. I'm just bothered with this flush and just kind of see what happens after the flush. You can see that we got oversold. And this is two things you could get accomplished by doing this or whatever instrument you trade, especially if you got timing solution. You get to back test and see how price actions behave within the Fourier forecast. So let's jump into it. Right now, we're going to see using, and I'm going to show you, because some of you might ask, well, why didn't you use this low? There's two differences between this one. Some may pick here and some may pick here. Back testing, you figure out which one is a better one, but both give good results, and I'm going to show you. I just normally just I gravitated to this one, but you probably would have done it. It would be like, you know what, this is the real low, and I'm going to pick this one. So either way, we're going to go run past. We're going to do a one pass with this from this swing low to this swing high. And then the next pass I'm going to do from this swing low to this swing high. And then you could, back test in the future, from here to here, see how price action. But I'm just taking from here to here. Let's open this up. I want you to see the nuances, the stuff that I look for when I'm trying to decipher what's going on with the Fourier string. So price action is going. I'm not in it. I'm just looking. I'm seeing here, and I'm kind of ignoring this. I'm just going to show you so you can see where the peaks, what price action really does, and how my eyes are seeing it with the Fourier string. So somewhere around here, this is the peak, 410. This is what it's forecasting. And there's a couple of them of the overtones that are forecasting a high too, or not a high. Sometimes I get confused. A turn. I'm looking for turns. The pound could continue pushing lower, and there's a possible swing low, or it could continue pushing higher, and there's a possible swing high. Sometimes the projection wave of the Fourier tells you the direction, but sometimes you're going to see that this is going up and prices are going down. So the way I use it, and I've done a video on this, I'm just showing you, more in depth of a strategy that I use. I'm using it as a turning point, not direction. I'm going to let price action give me the direction. I'm going to use it strictly as a turning point. So wherever price action is going, using other cycles or whatever, just trying to try to determine that. You can use other tools, but this is just strictly turning point. So right here, I'm assuming anywhere between April 10th, and I don't normally go forward. I normally go from the peak back. So I'm assuming from the 10th, 9th, 8th, somewhere around there could be a possible swing or turning point, especially lining up here. So let's see what happens. Price action is going kind of sideways there. And you always want to look at the RSI. Maybe I should just minimize. Yeah, there you go. Use the RSI, see where you at. It's kind of smack in the middle. There was a turning point right here. So I'm waiting for here. Nothing's happened. I can see that now. It kind of pulled back, came here. Right here was my turning point. I could either go long or not do anything. Here is a high. You see that prices made a low here and made a high here, and nothing really happened where I was really looking at. So it was either ahead and way past my projection target of date. So I either could have gone long, gone a couple of pips, just seeing price action, taking out this high here, this resistance level going up, and then maybe getting stopped out. But right here is a high. So I'm assuming what could possibly happen here? You got 1, 2, 3 wave up. If this is the end of it, and if I want to go short, where would I get out? I would want to probably get out here, somewhere between 430, 28, 29, because this is the closest one as a swing using this overtone right here. I'm showing you right here. That's the one I'm looking at. The next one will be this one, and then the next one will be somewhere around here. So there's like this overtone, and then the Fourier showing me these dates here. So if I go short, or I want to wait for another candle to give me conviction, maybe I go short there. And if I'm still short, I'm trailing my stop. I'm assuming, all right, it's going down. This is going to be my target, 430, April 30th. Well, now it goes up. It takes that out. It probably maybe would have stopped me out if I was trailing my stop, maybe close above this here. Or however you trail your stops or whatever. So you're stopped out. I was assuming it's here, or if you still got, your stop way above or giving a little more wiggle room, it could probably still flush down to here. Maybe. But the way price action is going up and down, higher highs, just pushing higher, you probably would have gone stopped out. And instead of it going all the way low and covering here and getting out, it reversed and went up here. So now the question is, now that it's here, what's going to happen? Are we going to continue going higher? If it does, then what you want to do is you want to set an alert up here. It's like a double top. And if it closes higher, you probably want to jump in. Maybe it wants to trend higher. And the next turning point will be from here, will be somewhere between May 11th, the 10th, or the next wave will be somewhere around here, May 20th, 19, 18, or May 24th, 25th. I'm using this one, and this one, because we're already here. That's if we're going to continue pushing up. But if it's a double top and now it's going to retrace back, same thing applies. We're going to look for either a swing low between, May 5th, around there. If it's not that one, May 11th, 10. If it's not that one, then May 20th, around there, 19, 18, somewhere around there. And you put your alert up there, and you look for a reversal pattern. Down, sideways. It looks like the momentum now is to the down, so maybe you could short it in there intraday, put your stop up here. And now that if you're in, then you're assuming somewhere between May 11th or May 21st, you want to get out. I'm using this projection peak right here. And it could be 21st, it could be 20, it could be 19, or this one right here, May 11th, 10, or 9. Let's see what price action does. It's going lower, sideways. Right there, you probably could have gone out. Or there, you definitely would have gone out there if you're using this one, and you got a nice little pips there. Now, if you're assuming, it might even go even lower, then your next will be this projection, this overtone right here, coupled with this one. if you're still short. You see price action, it's like, wow, it's still going down, it's going down. And this is the actual low, swing low. But you see the wave, it gets you kind of close. It doesn't sometimes nail it like on the peak. That's why I say sometimes you just got to get the peak and go left. So 18, 19, 20, somewhere around there. And sometimes, price action pops. That's why you trail your stop. You got out. And as now it's going sideways, you probably would have gone out now if you didn't get triggered. You see the price action now, it's kind of paused. You definitely would have gone out. And now you're here. So now you're like, okay, so now that we came from this swing low, it could continue going lower. So you put an alert down here. And if it pushes past that, then you want to jump back into trend of going lower. And you're looking for, this overtone somewhere between June 1st, 31st, 30th, around there. Or you want to look at this one over here. And this was interesting because this one, I like this pattern. You got an overtone here, you got an overtone here, and you got the projection Fourier right here, all lined up. And it's right at the peak. So this is a perfect example of when price action peaks on the peak. You notice it doesn't really do it here. It did it here on the overtone. And it did a swing low here. There was nothing really there. Swing high here. You can see swing low here. And the peak was here. So you see sometimes it works, sometimes it doesn't. But coupled with oversold RSI, you're thinking, you know what, if anything, it probably has to go higher. So, but you put your alert just in case it's just kind of want to trend lower. And you put your alert up here. You're already at the peak where the overtone indicating, you know what, there's going to be a change in trend here. So let's see where we go. And then you see what happens. With both alerts, see where the price action wants to go. Inside day, pop, trigger an alert right here. You go long, figure out an intraday, or you wait for the next day to get a retracement, get in long. Perfect, it pulled back. Now you get in long and see what happens. It's narrowing down inside day, the battle, and now it pushes higher. So now, and it pushed higher actually on the peak. So, I mean, it really didn't do anything because you were assuming it was going to go up and you were going to get out here. But sometimes the nuances are that sometimes it just kind of consolidates. And then once it hits the overtone midpoint, and sometimes, a little orb of, maybe minus 2-3 days, something happens. And then now price action pops. So now that you have that pop, you're in long because you're assuming, you had your alerts, alert on the low, alert on the high, and now price action wants to go high. So in the future, you're looking, all right, you know what? I'm going to get out somewhere between 6.9, 6.10, around here. This is the peak. That's why I always go with the peak, and then I work my way to the left. So anywhere from 6.10, 6.9, 6.8, I want to start tightening stops and getting out. And has nothing to do with levels. But if you want to do levels, you can assume, you know what? Maybe this level around here is 26, 23. But if it blows right through it there, this is the timing that I want to get out. Price action is going up, going up, going up, going up, going up, kind of getting choppy here. And then it hits, or you could have gone out right here. So between 6.9, 6.8, you could have gone out. The high was actually 6.10. You're never going to get it perfect, but then once you see that reversal, you're assuming you're overbought. You definitely get out. Now you want to maybe sell it for a retracement and get pips out of there. But sometimes it continues trending. So sometimes it won't work, but you want to go with probabilities with the Fourier. And what the strategy is with the Fourier, you're getting out of these swings couple of days according to the overtones and the projection line. That's how you're getting out. That's how you're in and out. You're not assuming, you're getting in here and you're going to get out here. You're going to take a big long. No, you're playing the waves on this strategy. So you're like, okay, we got a big, bear kicker candle. What are we going to do? Should I just wait to see the next candle? Boom, you got this. Or you could have gone in there, or you could have waited. Now you wait for a retracement, you go short. So now that you're short, you want to see, where am I going to get out? According to the overtones in the projection line, this is the peak, 629, 628, 627. Lines up here too, 630. Anywhere around there, you probably want to get out, because that's the next peak, which is this one, Fourier, and then this overtone. And if it continues going lower, pushing lower, then your next one would be somewhere around July the 12th. And since we don't know, I kind of know, because I'm giving you the pivots here and here, but we don't know the future. So this is kind of giving us an insight, the probability where prices may turn around. So you want to do is, you want to have a game plan. Okay, if I'm going short, if I'm going to get out, it's going to be somewhere around this overtone or this Fourier, projection line right here. Let's see what price action does. You're short. You like to see the price action. It's going to go up and down, head fakes, but you want to lock into your plan. Okay. Very oversold. Over here, came up, oversold. You're getting close. You're actually at the peak. So 629. So right there, you probably could get out, or maybe wait for another candle. Once you see candles like that, you then probably want to get out, because there's some buying momentum. And now that you're here, see, I'm taking you step by step. You can back test this with any stock you use. Now that you're here and you're oversold, we'll assume that we want to go higher now, unless it's going to continue. So what you do, you put an alert on the low. Maybe you wait for another day. If it goes sideways, and you put an alert on the top. Maybe you want to put an alert up here, 25, 27. If that's taken out, you could go long. But if you're going to go long, the next point you want to get out is somewhere between July the 12th, 10, 11, around there. And if not there, somewhere around July 16, 15. And if it's not there, and when I say those dates, I'm taking this overtone, I'm using this overtone, bottom peak, and I'm using this overtone right here, which is 7/21, July 21st, 2019. And I'm using these three as turning points, depending on what price action is doing. So let's give it a little. That looks very bullish. Maybe you get in on a retracement. Maybe there you get in, or you want to probably wait till this candle gets in here. Looks very bullish. Kind of sideways. You're probably in now, if anything. It looks like it's going higher. So if you had a trigger here, if you're like conservative, you're like, you know what? I'm going to have an alert here. And if it breaches that high, I'm going to go long. So it's kind of risky here. And if it takes out this low, I'm going to go short. So if you haven't even been in, now you got to consider, now I got to go long, because then it's going to get overbought. And we took out a pivot high. So now let's say you're long. That little pullback, you got in. Now it's going higher. You're in already. You're in somewhere. See right here? This is where you probably would have gone out. It would have not been much, just a few, just because you were going here. But if you were riskier and more aggressive, this candle would have been like, all right, I'm going to go in, and then I'm going to get out somewhere around here. So the aggressive ones would have been, I'm in, I'm getting out somewhere around here. The more conservative ones, I'm going to wait for this swing high to be taken out, get in, and you made a little something, but not compared to the aggressive trader. All right, so you're out right here. Now you're on the sidelines. You're waiting to see what happens. Pulls back, kind of chopping around. So right there, you could have put an alert here, and you put an alert right here. You see that that's major resistance. If we take out that resistance, maybe you could go long. And if you do go long, and we're getting close to this turning point, which is right here, is the 21st. You got the 20th. You got this pop right here. If you go long, so looking at this strategy, you'll be like, if I am going to get out, it's going to be somewhere around the 31st, the 30th. This is where this overtone peaks. And if it's not here, I'm going to probably get out somewhere around August 11th, 10, 9. You know, some of these dates, I'm just throwing them out there, but they could be Saturday or Sunday. But you get the idea. You want to like pick it up on a Friday or on a Monday. And the peak of this Fourier, it's on the 10th. So let's see. We put an alert up here, and see what happens. It popped, and it just took out that high. You get in long. And then the game plan is you're going to get out either here, see what happens. Getting close, getting close, getting close. So it's right there. You probably could have gone out, or that candle, definitely you would have gone out. This is the peak right here, and you get out. If you're more aggressive, yeah, you know it's going to go higher. Then you pick this projection line, August 10th, or right here. So the earlier conservative ones get out. Let's see, the one more aggressive is going to go higher. It's going to go higher. And this is where you would have gone out. But the peak was August 6th, right here. And this is where we at right here. So now I'm going to show you. If you would have picked this one, what would have happened? Oh, no, this is the lower swing low. This is the real one. And this is what happens in trading. You got to make decisions. And these are the kind of decisions you're faced with. So some would pick here, some would pick here. So if you were the one that picked here, I'm going to pick this swing low and take this swing high. Let's see what happens. I'm going to make it a little more quicker. You see right here, prices pulled back here. Not oversold, but kind of risky. This could be a swing bottom low, somewhere around here. And then the next will be the swing high, which is this overtone. So it's from this overtone to this overtone. That's what you'll be trading. And if nothing happens and prices continue going up, then this is the overtone where you would get out. So you can see that price action found support here in this overtone, popped, made a high here at this swing overtone, and then pushed lower. So if you were short, you would probably get out anywhere between April 23rd, 22, 21, came down here. Now, if you were going to get out, the swing high was on this overtone. So the peak was, the bottom was May 1st, 429, 428, 430. And then, if you went long, you would have gone out on this overtone. Now, if you go short, you would have gotten out here. You see, sometimes it doesn't work out. And if you would have gone out there and you would have gone long, then you would have gotten stopped out. Or you would have gone out somewhere around here. Same thing. See that sometimes even them being opposite like that doesn't give you good results, but sometimes it does. So if you did go long, you got stopped out. And it made a swing low here, and you can see that it's not perfect because there's nothing here overtone-wise. So it made a low on nothing using the Fourier. But it did it here. So it happens. So what you do is you kind of wait, and like the strategy is you put an alert here and an alert here, and it pulled in, and you kind of wait, where is it going to go? Is it going to go down or is it going to go up? Once you get an alert that it triggered this high, then you're assuming prices are going to go up. And look, it did it right at the overtone peak right here. It popped. So if you go long, then the next thing you want to do is you want to go and get out, because you don't know what's going to happen. You're using the overtone as guidance. You want to get out on June 3rd, for the 2nd, the 1st, using this overtone, or you could use this overtone if it continues going higher. If you're riskier, you pick one of these. This one was, the bottom part was June 11th, and it peaked on the 10th. Prices now went down. So if you were short, you're assuming, all right, if I'm going to go short, and look, overbought. So definitely a great place to short. And if, you were wrong and it wants to continue going higher, you just put your stop at the high, especially when you got a bear kicker candle like that. So you're assuming, okay, I'm going to go short from here, where it could be the possible turn. The possible turn, and this one was really nice and perfect, was June the 29th. Both of these peaked lined up here and on the top. And interesting, here, they both kind of lined up and almost kind of here, but didn't work out. So you can see that there's pros and cons to it, but you get some good results that I think overweigh the bad ones. So this was your target. You get out, you wait for a bull kicker or some bullish candle. Now you go in, you're like, all right, it's going to go high. Where I'm going to get out? You would probably get out here using this overtone. You would get out here using this overtone. And if prices continue trending like we did, and they continue going higher, so if you didn't get out here, or if you did, and you got back in, and you didn't get out here, and it's continued trending, or you get back in again, then chances are it's going to get out here. You're going to get out here, or you're going to get out somewhere around here. So now looking at the future, this is where we're at. And I don't know what the pound has done today, but looking at this, Fourier, you want to look at this overtone of August 17, 18, 17, that's Monday. So maybe 17, 18, there could be a possible turn. Did the pound pop today? I don't know what's done today, but whatever it is, this could be a possible turn. Either that it goes lower or it pops, makes a high, and if it's going to pull back, whatever it does, this is the date you want to keep watching for a possible turn, a pop, a continuation. And whatever it does, then the next day you want to watch will be, this is the peak, September 1st, 31st, that's a Monday. So anywhere between the 28th, well, stretching a little bit. Anywhere between Monday and the 1st of September here. Using this overtone, September 4th, 3rd, 1st, that first week here. Extreme will be this low here, September 11th, 10th, and 9th. So those are the dates you want to watch for possible turns. So using Elliott wave, it could be, we're probably in a wave 3, maybe push a little higher and do a wave 3, maybe pull back, and if it does, then chances are these could be possible swing lows for a 4th wave, and then, do a wave 5. And that's just using that from this pivot here. Now we go back to here for traders that is like, no, I'm going to use this one. This is the real one. So you can just see that there's results on either one you use. This one, it looks like it's a little more cleaner, but I'm just doing this video just so you can see that when we get to the future to see what happens, it'll be interesting to see. So we're definitely in the overbought zone. Doesn't mean that it won't continue higher, but we're very, very extreme up. There's a pivot here, swing high on the 10th. You can see that we're still chopping around. Do I got all the dates available? No. These are actually all the dates. This was today, but not real time. I'm sure the pound is somewhere else. So right here, if it continues going higher Monday or sells off and goes lower, whatever happens next week, dates I'll be watching here will be, this is the low, August 31st, even maybe the 28th, 31st, and that's using this overtone. And I hope you're writing these dates. That way, if you especially trade the pound, you can keep an eye on it. And then this one right here is September 4th. So anywhere between September 4th, 3rd, 1st, 2nd, 3rd, and 4th is the actual Fourier projection. And then the next one will be August 10th and 11th. So you see, it kind of, I think, remembering the dates, it kind of resembles the other one from the other pivot. So those are the dates you want to watch: 10, 9, 8, for a possible turning point. And then all depending on where the price, the pound is, what it's going to do next week, if it's going to go high. And also, like I said, just because you see this, sometimes the pound will follow it like it did here. But sometimes this would push lower and the pound would just continue going higher and opposite of the Fourier projection line. Like here, it went up. You can see the prices went down. Don't let this trick you. I remember when I first started using this, I thought that price action was going higher. And then I started back testing this thing and I started realizing, you know what? Price action doesn't even sometimes follow it. But when it follows it, it gives you more conviction. But when it doesn't, you shouldn't, get your heart broken just because it's not following it. Price action is going to do what it's going to do. But the key, I think, to this technique using the Fourier indicator in a timing solution is using the overtones within the projection line. I think that is the most fascinating thing because that's giving you timing points into the future. Like I said, this software, I think, is the only one that has it. I haven't seen anything else somewhere else, but if there is, I recommend you use it and use it to this fashion and back test it to see, what results you get. I'm going to sign out. This is going to be a long video, but this is kind of like a tutorial, especially for timing solution users. I think this is a great tool. Back test it on your instrument, and let's see how the pound behaves next week. It'd be interesting to see these turning points to see what happens in the future. Hopefully you like this video, subscribe, and I'll keep you posted on my thoughts on Gann theory.